It's not the size of the.
Yes, you want to start the episode with it's not the size of.
I didn't know you'd
Complete
get tricked.
that sentence, Dinesh. Complete that sentence.
No, not on the record.
Hello and welcome back to a very confusing episode of What Was That? Confusing not because of extraneous reasons, but because we are switched over from one podcasting platform to another. I am sitting in a different place right now, so I don't have my usual camera setup. I am looking very grainy as per Nitesh. I think I need to switch to a non-grain diet. And there is a car near me that seems to have its burglar alarm gone off. Hi, Nitesh. How is your life? You look like you
Great.
haven't shaved in 3 weeks. How
I
much
have
money have you lost?
I have not shaved, but doesn't matter. My opening line was going to be before it became an inadvertent size joke. My opening zinger was going to be Vinny, hide your kajal, hide your mascara. JD Vance is coming to Bangalore, to India
JD Vance is coming to India.
next week. Yeah.
Arey
Maybe
wha-
he wants us peasants to apologize in person.
Do we have suits, firstly? Do we have suits? We will wear suits. Secondly, do we have stadiums that are big enough to accommodate the crowds?
I This is probably because of the wave of Amir Khan PR that is currently washing over all of us. But Amir Khan's YouTube channel has suddenly become quite active and posting clips and BTS of Lagan, among other movies. And so Lagan has been on my mind for a couple of weeks now, thanks to Amir Khan. And I was reminded of, do you remember anything from the movie? Like apart from the grand
I once,
finale?
so I had a British colleague when I was working for the Swedish company. And at one conference, he was asking me what's a nice Hindi phrase to use to win over people. And I'm like, and he was British, mind you, it's
That
important. So I told him to just go say, Tum sala Hindustani, hum Angrezon ki jutiyon ke niche marega. Unfortunately, he went straight to HR because he knew me. HR, she comes to me, Vineet, why are you telling Rob this stuff? So
The specific clip that has been on my mind for ever since I saw the JD Vance news is after Captain Russell has put down the demand of let's have a cricket match. Or that's how I remember it, at least. I might have my chronology mixed up. The King and Captain Russell have a private lunch, dinner, where the King is requesting, please take back the taxes because the poor villagers just can't pay it this time because of the drought or whatever. And Captain Russell says, okay, we can do that. You just need to have some meat, which apparently is not a meat eater. I don't know why that scene's stuck in my head, especially the closing line, फिर आप गोश्त भी तो नहीं खाते. It's sad that neither party here has a sense of humor.
really unfortunate. And we don't want to be the ones doing that.
Oh, no, no, no. We are the poor villagers in this story.
I am the kachara.
I'm the drummer who can't talk. And let's just keep it at that. Yeah.
Yes. Yes. Maybe they'll re-release Lagan also. There are some re-releases happening, right? Andaz Apna Apna is coming back.
Yeah. For some reason, even in the Avarkal festival, I didn't see Lagan. I would have definitely taken my kids for that.
Maybe they don't want to give any ideas to our finance ministry.
But it is appropriate. No, we are living in the era of Tinguna Lagan.
But Tinguna is relative, right? Tinguna as opposed to maybe a few months ago. But look at the
Uh,
bright side. It could still go Tinguna.
hmm.
Be positive.
Yeah, yeah, yeah. Yeah. That's how the tariffs have escalated also
Yes.
between the US and China.
We
Double,
don't have
no, no.
45%. We
No,
don't have
no.
145% income taxes. We don't have 145% income taxes. So what are you
Correct.
complaining?
No, unlike duties, when income taxes go above 100, the government has to pay you.
They start from negative all over again. You have no, but if I earn 10,000 rupees in a month,
Uh-huh.
I give the government 14,000 rupees.
How?
Who
From
cares
past
about
savings.
how? What are you talking about, man? Who cares about how?
From past savings. Yeah, yeah,
Should.
yeah. You
You
need to
should.
atone for your past sins. Yeah,
Past life.
technically.
Yeah, yeah. Past lives. We are Hindus. Yeah, yeah. I did not
Correct.
pay too much tax in my past life, so I should make up
Mm.
for it.
Possible. Possible.
Let's go with your first
And
story. Or taxes go up.
uh, my story is bonds. Just what the hell is going on and why it's so significant, why people are freaking out so much. Let me, if you will allow me, let me indulge in a little financial geekery.
I'm actually very curious about bonds because I thought when things go up, that's good, right?
We'll,
Bond prices
we'll
went up and
get,
out. So yeah, I want to know
we'll
more.
get to that. We'll get to that. All right. Just for context, I had never studied finance or business in an organized manner. My entire education was science, then engineering, and yeah, like half of Bangalore, I'm a software engineer. But my only learning of finance, structured, organized learning, happened in the last 3 years when I did the three successive levels of the CFA. One of the most prominent modules in all three levels is fixed income, which is bonds. And there is a larger underlying theory of pricing any asset, any investment, not valuing it, which would be, okay, how much do I think this company is worth? That's valuation. Pricing is when you decide how much should this stock trade for today. The fundamental rule of investing is that for every additional bit of risk that you take, you expect a higher return. You expect to be rewarded. Starting with, I don't want to take any risk at all. Okay, fine. That's the starting point. And then you add one step. Okay, how about if I am ready to take a little bit of country risk? So I'll say instead of a developed country, I'm going to buy the bonds of a developing country. So you add a little bit of premium for that. That while maybe I was okay with the 3% return from a German or a Swiss bond, but I'm going to need at least 6% if it is an Indian bond, for example. And then you say, what about stocks? In stocks, you're adding another layer of risk. So you require a little more return for that. Then you say, what about small cap stock? So you add a little bit of more expected return until at the edge case, if you're investing in a small cap tech startup or a micro cap tech startup listed on the Kabul Stock Exchange, for example, you would expect, I don't know, 30, 40, 50% returns on your investment because it needs to be commensurate with the amount of risk you're taking, right?
Yeah,
It's a
and then we
very,
get the non-public startup investment, VC investment, where you want 100x.
because again, the theory is still the same. You need to be rewarded for the amount of risk you're taking, right? So that holds even in private investments, even in moonshots, that still holds. Even in investments where it's difficult to do cash flow analysis because you don't know, or maybe even if you're certain about the prospect of the startup, you don't know if it's going to start making money until 7 years or 10 years down the line. But even there, this risk premium, that's what it's called. The risk premium concept still holds in every investment. Whenever you're taking more risk, you expect more return. But the base case in all of this is, okay, I do not want to take any risk at all. I'm spooked and I'm worried and I'm not feeling very optimistic about humankind as a whole. And so I just want a safe place to keep my money. For the last 80 years, that the first element of that risk premium equation, which is a risk free rate, is where you start. That this is the base. I don't want to take any risk. So just give me the risk free rate. Has been US Treasuries for the last 80 years. That was the starting point. The first layer on which the whole edifice of modern finance is built is, okay, you have the US Treasuries. You don't want to take any chances. Money goes there. Anytime there's a financial crisis, anytime like during COVID, like during the GFC, the global financial crisis, during the dot com bust, even going further back when the Asian crisis happened, or even further back, the flash crash of the 80s, even further back, consistently, every single time, whenever people were spooked, whenever smart money was spooked, it was always withdrawn from equity markets in the US or even bond markets from other countries, whatever. The safe haven, the one place you go when you're terrified of the dark, has been US Treasuries. And what Trump has done in saying, I don't care about the existing world order. I don't care how things have been done since World War II. And whatever his reasoning, what he did was he spoke the bond market. And that's the result. That's the reason this is where it gets confusing. I don't know why it has been accepted practice to talk about like bonds in this language, but bond prices went down. Usually, what happens is when everybody is scared, the money moves to US 10-year treasuries, and therefore there is more demand and prices go up. When prices go up, yields go down. That's where the confusion happens. This time, even though everyone was scared, money did not move into treasuries. And so prices did not go up. In fact, they went down. Because they went down, yields went up. It's an inverse relation.
Yeah.
I could
People were
illustrate it
not
with a
investing
very,
in treasuries.
yeah,
So
basically,
there's typically, okay, so let me get the relationship correct. There is uncertainty and people rush towards US treasuries. This time there is
yeah,
uncertainty. So therefore, yield prices are going up. Therefore, people are not investing in US treasury for some
people are
reason.
dumping the treasuries that they already have all.
And therefore, prices are going up because for those same bonds,
Prices are going down, yields are going up.
yields are going up.
Yeah. So the magic mark is
Hmm.
5%. If US 10-year treasuries yield 5%, that's the closest we'll get to. This isn't hyperbole, financial Armageddon. Because all those interdependencies collapse at that point of all the currencies and the like that would be catastrophic. And I'm not exaggerating. I'm not your doomsday YouTuber, although we are getting close, but it would be catastrophic for everybody, not just the US. The
This
dollar
was a week ago, right? So how has the movement been since then? Are things still where they are? Have they gone
bond
up?
market is still skittish. Yields have gone down a little bit, but they haven't gone back to their old trend. So everyone is just the best analogy I read about this was on one of the obscure subreddits discussing this. They said the Titanic has already hit the iceberg, and that's where we are. We're
That's
still afloat. We're still afloat.
people are still playing violins. People are singing. Kids are running
Yeah,
around.
yeah. But the thing has already happened. The event has already happened, and it's just how loud is the splash going? That's it. Is it
That's
that bad? I hope not. Could it get that bad? Yeah. What happens in these real risk events is even like long established relationships. Okay, when stocks go down, treasury yields go up, or the dollar gets stronger because all that money moves into the US, which is seeking a safe haven. All those interdependencies are falling apart. And so investors and markets hate that. The only thing that scares investors more than losing their money is uncertainty, is not knowing what to do with the money that they have there. It strikes at the very heart of what influences the flow of money from one asset to another or from one country to another. And pretty neat, you can see the correlation. You can see that the money left the US, went into German bonds and Japanese bonds and Swiss bonds, and you can confirm with the movements of those currencies and those bonds.
so is
So,
that good for those countries if they get more money in their bonds?
no, it isn't because the yields on their bonds are dropping. It's
Okay.
not good for anybody because this is like a dam bursting.
What could that devastation look like?
Markets in free fall is still okay because there is a way to recover from that. Currency is going to free fall. That's going to be irreparable.
But currencies free fall relative to other currencies, right? Some currency
Yeah,
has to rise for some to fall.
correct. Good point. Generally, when shit like this happens, disproportionately, it's emerging market currencies that get hammered. That was what the whole Asian crisis was. That's why when you go to Indonesia or, yeah, particularly Indonesia, you suddenly become a billionaire. That's the reason. Because their currency once faced a catastrophic devaluation. That's why you're a billionaire in Indonesian rupees.
There is a bright side.
We'll all be billionaires.
Like, bro, we
Um,
are into the
interesting
maths where 300,000 dong is 1,000 rupees. So
in
there's,
Vietnam. Yeah.
yeah. So what you do is you remove the last three, ignore the last three zeros completely, and
Yeah.
then put a 3.1, 3.2 ratio. Yeah. Now imagine doing that when ordering on Swiggy.
Yeah.
Not on Zepto though, because if you order on Zepto, they'll hide it. I tell you. Dark patterns, man. Dark patterns. Spend a day on
Uh,
Indian and you will hear about five new Zepto dark patterns.
an interesting aside. We've seen this happen in smaller scale before in the mid 80s. There was something called the Plaza Accord. So Japan became a manufacturing powerhouse in the 70s and the 80s. The Sonys and the Panasonics of the world and all those, the Mitsubishis were all born in that era, or they became behemoths in that era. And the US was spoke because the same thing was happening. There were massive trade deficits. The dollar became really strong compared to all the new Asian tigers. And so this landmark conference was held in the Plaza Hotel in New York, which is why it's called the Plaza Accord. And all these countries agreed to allow the US to depreciate against their currencies. So that strengthening of the yen caused the 10-year boom in Japan, which finally led to the bubble popping and the lost decade. The Japanese markets just came back to the peaks that they reached 30 years just now. For 30 years, one entire generation basically lived out their lives being unemployed in Japan. They're called the lost generation, and it's not pretty. The
I'm
genesis
just
of that
for
was
people who are binging this podcast because we ended the last episode on a very happy note that climate change is wreaking havoc
I
on
told you we're getting really close to being one of those birthday YouTubers. No, like I said, that was on a much smaller scale and it was contained to just one country. And the other Asian crisis that happened ex Japan was much faster because, like, the economies of Indonesia and few of those countries, the Southeast Asian countries, just collapsed straight away because of these currency shenanigans. It's not pretty. It's never pretty. When the status quo changes gradually, bit by bit, it's fine. But this is a regime change in the sense that the market is still trying to look for what the new order is because that's what investing is, no, or at least that's what trading is, right? You try to constantly make sense of what's happening and then try to project what's going to happen. And it's going to take the combined might of all the currencies and all the financial systems of the world to replace what the US dollar has been doing for the last 80 years and what the US Treasury has been doing for the last 80 years.
fun.
So even now, when you went to Vietnam, for instance, and if you swiped your card somewhere, your card which ultimately showed up in your statement in rupees, there was no direct conversion from rupees to Vietnamese dong. Probably jump a dollar hoop somewhere. And this has nothing to do with US aid. It has nothing to do with Iraq or the US military action. None of that. It's just that uh, the US dollar is the largest pipe through which the world's money flows. And so even when you were buying a shirt in a small street side market, you still had the dollar involved, even though you didn't see it. And for that to go away, then who replaces it? How? Who decides? At what rate?
My bank account replaces it. Everyone, if you want to exchange money of any kind, just send it to my bank account. I'll put details, I'll put my UPI details, and I'll send it in a different currency at some point. This is investing advice. Actually,
Beneath
not
says
advice. Is it investing advice? Is it currency advice? I don't know. What advice would this qualify as?
you uphold the tech half of this podcast. At least float a shitcoin, man. Why are you using UPI? This is what,
Yeah.
no, ironically, this is what crypto is made for. This is what the Bitcoin white paper foresaw. That what if from a clean slate, we had to build a new global currency? That's exactly what Bitcoin is. It's
And
amazing. If
it's
at
amazing that
what
it's amazing that inter country flows exchange of currency becomes so quick with Bitcoin. There's it doesn't take any time. It doesn't take time because there's no regulation yet. Once you
yeah,
bring in the regulation that Western Union has to go through, then it will take time.
yeah.
Yeah.
And
Just
I
send money to my account. Just send money to my account. Period. There is no step two.
China is proposing, among other countries, other people have also proposed this. China is proposing an inter-country settlement using digital currencies that lets at the end of every day net off whether I need to pay you yen or you need to pay me renminbi or whatever, depending on the country, the currency pair. And let's settle up at the end of every day. And let's do it using blockchain ledger.
Oh,
We finally have
blockchain.
a use case for blockchain. And it's the correct use case because both parties want that transparency. It's there's so much irony in this. It would be like one of the greatest stories of all time if somehow Bitcoin becomes what replaces the dollar global trade or some other digital currency.
Oh
That
God.
would be amazing. This is not investing advice. We're just flying our kites on what is. That's all.
Absolutely. Wow. Let me jump into story one,
Go ahead.
which is, as always, about a favorite billionaire. We just can't stop talking about him. I just can't stop talking about him. I heard about a new kind of scam as the result of a class action lawsuit against Tesla in the US. So, Tesla has a lot of tech in its cars. So, instead of time bound warranty, what they did was they gave a kilometer bound, a mile bound warranty. First 50,000 miles are covered under a warranty. And the class action lawsuit alleges that people were finding that while they were driving 20 miles, their odometer on the car was showing 70 miles driven. So it could run through the warranty quickly. And it was saying it would just run through the 50,000 miles quickly. And then after that, as soon as it crossed 50,000 miles, hence the warranty is over, then life would go back to normal. Then suddenly the daily commute has become much, much shorter again. It's amazing. A man purchased a used 2020 Model Y Tesla vehicle with 36,000 miles. He noticed an abnormal spike in average daily miles driven. It should have averaged 20 miles a day. It went 72.35. Yeah, the following year, the man's commute got longer after his warranty expired. As soon as it touched 50,000, they're not even very subtle about it. As soon as the warranty expired, his car actually recorded his commute got longer, but his car recorded 800 fewer miles per month once it was no longer under warranty. During the first 6 months, it displayed average of 2,217 miles a month. Then the next 12 months following the expiration, an average of 1,415 miles a month, even though the commute was suddenly longer.
I don't even know what to say, man. I, this is actually going to be the theme of my next story as well. Chori karo, be creative, you know. At least see, Volkswagen went through all the trouble of making sure their car identified when it was being tested and then suddenly adhered to emission norms. Ethics aside, that took creativity, that took brains. This is cartoon level incompetence. And it's something that's so easy because uh, even if you don't observe it in a normal car, in an EV or in an ICE internal combustion engine car, in an EV, range anxiety is your biggest worry,
Yes.
right? And so you're going to be keeping a really close eye on how much charge do I have left in terms of percentage, yes, but also in terms of number of miles. It's
So this
and
is like I have a few thoughts here. How if it's true, right? And I would say this is my main whatever to make me doubt this. If this is real, because how have more people not noticed this?
right.
Apparently, they set up full departments, like full service teams to make sure they were also, they had a full service team for warranty repairs that was just sitting on the phone and saying, oh, we've tested your car, there's nothing wrong with it. and just closing the case. So putting people at risk. Right. This kind of
Mm-hmm.
stuff. How more people not notice this story?
Maybe this is a one-off.
Yeah. So some of these stories are saying there were elaborate teams set up to do this within Tesla.
Okay.
So that is what that is the only thing that makes me suspect the story. How have more people not noticed this? According to these stories,
Mm-hmm. When I first saw this story, I did a little bit of digging. Apparently, I was so sure Tesla's warranty expenses are 4% of their revenue. Now, I don't know if that's high or low. It sounds a little high to me because that was my first question. How much can warranties even cost or warranty repairs even cost? Why
warranty
go
repair
through all
should
this
cost nothing, or should be
trouble?
like this is the
So
first
I,
cost of the car, right? Like it should be
yeah,
cheap for the
correct.
company to maintain them.
I looked it up because unanimously around the world, Toyotas are considered the most reliable cars. Toyota's annual warranty expense as a percentage of their revenue is zero point 0.8 or something,
Tesla is 5x.
5 times. Yeah. So at least the incentive is there to do something like this. Not at that cartoonish level of 3xing someone's mileage, but that 10%, 5 or 10%, would people notice? I don't think so. If it were lesser. If you and I were running an EV company and we had such nefarious goals as reducing our warranty claims by 10%, I don't think anyone would have noticed. So that's what we would have done in our hypothetical company.
Yeah, but 3x.
Yeah, that seems egregious. I don't think we would have seen a lot more stories like this, and a lot more Instagram reels and YouTube shorts of, look, I'm driving a kilometer according to
Yeah,
my
it should
GPS.
jump. Exactly. It should jump if it's
Yeah,
3.5x or 3x or whatever it is.
correct. It
Like
seems
that should be tested before the guy running into a Coyote versus Acme type painted wall. Now, let's go to your story to full automotive episode.
inadvertently. No, I forgot an important bit of story
Please.
one. The Plaza Court was in the Plaza Hotel, which is in New York, which around the time, guess who owned it?
Hans Gruber from Die Hard, Nakatomi Plaza.
Close, as in
Trump?
late 90s movie fair. Yes, Donald
Huh?
Trump. Which is why he did not own it at the time of Plaza Court. He bought it shortly after. It was owned by the Marriott Group before that. He owned it at the time of the filming of Home Alone 2, which is why he finagled a cameo in the movie in exchange for all the shooting that happened there. Home Alone 2 is almost entirely set in the Plaza Hotel. And that's why he's there. And that's why Chris Columbus recently said that I wish I could just edit him out because
Yeah.
he's obnoxious, whatever. But
And
yeah,
he said that this is the biggest regret of my life. And somebody on Twitter was like, this is the biggest regret of your life, not all the indigenous people you killed when you discovered America. It was a joke. It was a joke. The guy knew what he was doing. But yeah.
yeah, it's funny how these things tend to intersect in
And there's
unfortunate
always
ways.
Donald Trump in the middle of it.
Yeah. So the reason that crackpot theory that's being floated is being called the Mar-a-Lago Accord is because one of the most famous meetings in the financial world was called the Plaza Accord. So that's where they get the nomenclature from. Sorry,
And one of my favorite
I
cars
was
was the
fascinated.
Honda Accord. Too big though, but
Close.
close.
Yeah. There's a nice joke. Which car do you think Jesus drove?
I think because I have context, I'm guessing for Jesus, something of his own accord. For Jesus,
Yes.
what of his own accord? For Jesus.
Yeah. Yeah. Spoke not of his own accord. He didn't like to talk about it. Another joke. John said, someone come forth and receive eternal life. But I came in fifth and won a toaster. I love that.
No, but by the way, true story. At one point, we were staying in Sector 44 Noida. I was driving a Civic. My brother was driving us, and our neighbor also had a Civic.
You have
And one day I just go down and I see
uh,
all three cars next to each other, and I'm like, is this what it needs to live in a civic society?
great society. Yes. That was really good. Nicely done. Nicely done. My story of the week, second, third, and
Second.
is second is BluSmart. I know a lot has been written about golf clubs and apartments in posh societies. I'll still stick to my theme. BluSmart also issued bonds,
Should what?
and they also issued bonds.
Should bond. Oh,
Yeah, BluSmart issued a sizable quantum of bonds, and they exclusively tied up with any new gen fintech startups who are in the business of promoting bonds. Because, yeah, retail participation in Indian bonds is abysmal because we have the great FD and that
hmm.
substitutes for everything. So there's not much depth of maturity awareness around bonds, which makes sense because to have a strong bond culture, you need really strong legal framework of what constitutes a default, what you can do, and it needs to be in a speedy manner. That's why the US bond market is one of the best in the world because there are clear lines of this is a default, this is a technical default, this is a proper default, and they have and they actually enforce cross defaults, saying if you default on any of your other bonds, we will consider it a default on this one as well, and those are enforced. So unfortunately, we have none of that, and you had retail participants who were sold Blue Smart bonds by startups. I haven't even heard the names. UB Club, spelled with a K, and Centricity.
Wait, how are random startups selling Blue Smart bonds? Shouldn't Blue Smart sell Smart bonds?
Yeah, so they were issued by BluSmart,
Oh,
and
secondary.
these guys, no, these guys facilitated. It was a primary sale
Ah,
from
okay.
BluSmart. They found the buyers, which that's how all bond markets work. You have bond dealers for primary and secondary issues. Everything except treasuries. Treasuries you interact directly with the government, but for private issues, yeah, there's usually a dealer in the mix because there's no exchange for bond as such. You have somebody in the middle, and I'm sure they would have made bank on these. So now that the bonds are in default, and one of the investors in the Economic Times article, which I will share with you and you can link in the show notes, actually said that they were still promoting the bonds, these startups, even after a default had already happened, even after SEBI had issued a warning, even after all of that, right up to there, they were selling. And even more than stocks, a bond it's a complex instrument because you could have two bonds that seem identical, but they could have completely different implications in different scenarios based on the fine print. These are called the covenants of the bond, and they can vary wildly, which is why even the bonds that were issued had a rate of interest. Wait, let me just find it here. They were issued at a really wide spread from high single digits to almost the 20s. Imagine, like, these guys sold bonds of BluSmart saying you're going to get 16%, if I can remember off the top of my head, 16% on these. And then BluSmart also had bonds that were at 9%,
Wow.
which makes sense because their covenants were really different. My point being, these are complex instruments. And yes, it's wonderful that more retail participation is happening in NCDs. That's what we call them here, non-convertible debentures. This is not good. And unlike SEBI, you have no protection here. None. There's no regulatory watchdog. There's nobody you can complain to saying I got screwed because this is you're lending money in the form of a secured debt to somebody. There's the implicit assumption that you know what you're doing.
Yeah.
Because if you, Vineet, were or I, Nitesh, was borrowing money from you and I failed to pay you back, you have, of course, the criminal recourse of saying I finagled some money from you, but there's no structured civil way of saying give me my money back. And it gets much worse with corporate because the smartest is going to say here are the assets that secure this. And that's what happens in the US when a bond default happens. You have assets which had secured the bond itself. And so the lenders can seize those and liquidate them. And it happens all the time and it happens smoothly. Man, I'm going to miss the US market so much. They did so many of these things so well. It's a real
Like
shame.
how you're talking about it in the past tense, like the US market is dead.
No, just these little things. It's like such a complex system. And they're ironed out the 99% of it that is same in every deal because they've done so many of these over and over and over again. And just civil aviation rules, even bond covenants are written in blood. So, like famously, one of the banks, instead of paying out Revlon's interest payments, they accidentally paid back the whole amount of
Oh yeah, I
some.
remember that Citibank. Yes, yes.
So then after that, bonds which were issued after that had covenants of if we accidentally pay you, you have to give the money. This system that has evolved over 80 years was written in blood, cost a lot of people, a lot of heartache, maybe even their lives. And it's going to be really hard to rebuild this from scratch. We'll have to reinvent the wheel all over again.
Meanwhile, when I think of overpriced Indian automotive bonds, all I can think of is a 007 license plate costing 1.5 lakh rupees.
Isn't it amazing? Like this is a 50-year-old IP from another country, and it isn't even like 007 is if you know, you know, right? It's called 8055 boss, which is also a very popular special number, but at least there you don't need to give context to anybody. Here,
Yeah.
only if you've already seen a Bond movie or know who Bond is, know that his agent code is 007. It's so cool that in a random country halfway around the world, that number carries so much significance. So cool.
I'm
Just
going to
saying,
move on to story number 2, which has nothing to do with the automotive industry.
thankfully.
Yeah. Because automotive is not an area of expertise for us, unless it gets me an apartment in Camellias. Never mind. Let's
Or a
not go
night
there.
that or golf clubs. Same thing.
Don't get me started on golf. Oh God, such an evil game. Such an evil game. Let's destroy the complete ecosystem, acres and acres of it, so that we can go have a walk. Just go take a walk in a park. Never mind. Let's not get started on golf. My second story is, so there's this guy I follow, Ed Zitron. This
Mhm.
is he is not a journalist. He runs a PR company in the US, shuttles between London and Vegas. And he started his newsletter a couple of years ago. This, funnily enough, is the guy, a one man PR company guy, who is doing some of the deepest reporting on OpenAI and their numbers. And he was deep.
Right.
And he puts out one very rant filled newsletter every couple of weeks asking, why am I doing this? Why is no one else doing this? I am not a reporter. Reporters wake up, do your job. Meanwhile, reporters, tech reporters for New York Times and all, Kevin Rose, Casey Newton, a bunch of people, they're like, oh my God, Sam Altman looked at me this week and he spoke to me. So, yeah. So, some of the stuff, so he's tried to consolidate a lot of, in his latest newsletter, he's tried to consolidate a few things around OpenAI, around the valuation. So, basically, and we've discussed this before, OpenAI is trying to raise money from SoftBank.
Right.
SoftBank has no money. SoftBank is trying to raise debt to invest into OpenAI, which is deeply funny. SoftBank is now post facto trying to put conditions on the transfer. So, first, about the valuation. OpenAI says it closed the largest private tech funding round in history, where it raised in past tense, even though the money is nowhere, doesn't exist yet. But it says it raised $40 billion, out of which 10 has been raised. The money still hasn't come in yet.
Mhm.
And the rest is going to be arrive by the end of the year, but also it has to be created before the end of the year. It doesn't exist yet.
Right.
So 10 is at least committed. Out of the remaining 30, 20 will come from SoftBank, which, and this is very murky. These figures are very murky because there's very little information. 20 billion more has to come from SoftBank, but SoftBank has put a condition that OpenAI has to go for profit by October. It's a not for profit structure right now. And there's also a court case with Elon Musk going on. Elon Musk
Mhm.
was on the board very, very early on. He told them to go for profit very early on. They did not. There was a big fight. And now he's saying that they are claiming to be not for profit, but they're actually not for profit in reality. And he's suing them and they're counter suing him. And he's made an offer for the company, which is complicating their life. It's very murky. So coming back, the round, which is totally about $40 billion, of which there are conditions attached, 30 overall has to come from SoftBank, 10 from other people that OpenAI will syndicate. That SoftBank will syndicate. So SoftBank has said that it will bring other investors for those remaining 10. It has valued OpenAI at $300 billion this round.
Mhm.
And this is funny because the figures floating around for this round were ranging from $250 billion to $340 billion. There's a $90 billion gap in there for a company that's currently making a revenue of $4 billion a year, which are also estimates based on monthly revenue figures, not actual annual revenues. But let's assume this $4 billion is actual revenues for 2024 for OpenAI. So this $300 billion values it at 75 times revenue.
Wouldn't you
You are the
like
finance guy. What's
wouldn't you
your,
like that multiple?
sorry?
Wouldn't you like that multiple?
I would love that multiple. I would absolutely love that multiple.
So Sam Altman figured out a way to get it. Say it.
सही है सही है.
That is at least in every self-professed startup hub of the world, or at least in India, like in Bangalore, like in NCR, there should be temples to these guys. To Adam Newman, to Sam Altman, they cracked it.
I want 75x revenue
They
multiple.
figured out a way to get it. Isn't that a very specific kind of talent?
If we got 75x revenue, I'd go to my co-founders and say, "Yeah, बेच देते हैं. बेच देते हैं."
I'm out. As much as I love this, I would not.
So it'll be that. It'll be like, much as I love this, I'm out. But also, have you guys thought about your future? You should also be out. 75x revenue. So,
With Orwell's problem is that that revenue exists only so long as he stays on, right? Now, thankfully, banks will step in and happily keep his stake as collateral and issue him low interest loans that he can use to fund his lifestyle. There's that whole circus going on the side. But if he were to like drunkenly commit one night to buy a social media platform just like that, it would cause a lot of pain for him to liquidate his shares and raise the money and buy it. So the money is there, kind of, sort of, but he can't touch it beyond a limit, beyond a point. He can't touch it.
are you referencing current news or did you
Mhm.
just hypothetically make that up? Because
Hypothetically.
OpenAI has announced 2 days ago that they will create a social media network.
Seriously. Oh man, these guys all have such limited imaginations.
So, yeah, there's more reporting about. So, last year's revenue is estimated at $4 billion. Bloomberg reported that OpenAI expects 2025 revenue to triple to $12.7 billion.
All right.
This is interesting. They are estimating tripling of revenue. Perplexity is saying it will go profitable by 2027. Now, this is very challenging to say the least
Yeah.
because this assumes they assume that they will quadruple their API revenue of $1 billion to $3.5 to $4 billion. They will sign up many more people to their $200 plan. They're talking about a $20,000 agentic PhD level plan for companies. And I'm like, $20,000 where you'll get PhDs, actual PhDs, happily. $20,000 is a lot of money.
That's
PhDs
just
want money.
that's just
Yeah. So this is challenging because at the same time, what is happening is these AI models are getting very, very commoditized, which, if nothing else, puts a cap on how much they can price themselves. Everybody's at $20 for a standard plan. Everyone is, it's fixed.
yeah.
Nobody can go to 25 also. It's like all the podcast platforms that I've been trying checking this week. Everyone's stuck between $19 and $24 a month, pretty much fixed. Anyone goes beyond, they either have to offer mad new features or 4K, or it's fairly commoditized. Tripling of revenue within 2025, and we discussed a couple of weeks ago that so far whatever is going viral is the free, nothing sticky, nothing that people would pay for. It was essentially that Studio Ghibli filter
Yeah. Which
people
is
would
not
not pay for. You suddenly say, pay me 50 cents for this photo, people won't bother. Right. So these are essentially B2B enterprise tools. And they're expecting a tripling of revenue in 1 year after it's already been around for 3 years in the public imagination as the most public, whatever company, public fronting company in the world.
right.
Now the costs, these are interesting. So in 2024, OpenAI apparently spent about $9 billion total to make $4 billion in revenue.
As one
What is
does.
happening in parallel is that their relationship with Microsoft is getting sour. Microsoft has obviously been spending a lot of money to discount compute services
Right.
for OpenAI models. That relationship is, for many, many, many reasons, it's apparent to see that it's going sour. Now, therefore, their compute costs will increase because they're not going to get this discount anymore. Long story short, the estimates are, so there's this website called The Information, which does a lot of tech reporting. They are estimating that OpenAI will spend about $13 billion on compute with Microsoft alone in 2025, tripling what they spent, and doesn't include a $12.9 billion 5-year long deal signed with CoreWeave. Because Microsoft pulled out of their deal with CoreWeave is another company that provides compute. They buy GPUs from NVIDIA
And
on favorable terms. Just went public themselves. So that's another $3 billion a year. And remember, we discussed Stargate, which is this $500 billion investment plan between the US government, NVIDIA, SoftBank, and OpenAI. OpenAI is committed to spending $19 billion for that. And this is money that OpenAI just doesn't have. They barely have any money to keep their lights on right now. They are raising money desperately, and they've committed to spending $19 billion here. And by the way, this is not counting training costs. So they have to keep training new models to actually differentiate themselves. There are estimates that they will spend about $10 billion plus on training costs alone in 2025. So overall, there are figures that they will spend $40 billion this year. This is a company that made $4 billion in revenue estimated in 2024. Even by their own optimistic best estimates, they are counting on tripling that. And they're committing to spending money that they don't have. And so Edzetron, great guy, he's actually compiled tweets from Sam Altman and team about how the company is not being able to deal with capacity. On Feb 27th, Sam Altman lamented on Twitter about how GPT 4.5 was a giant expensive model. He also added that they would be adding tens of thousands of GPUs and then hundreds of thousands of GPUs soon. On March 26th, he said images in ChatGPT are way 4 Ys more popular than OpenAI expected and delayed the free tier launch. On the next day, he said OpenAI GPUs were melting. This is Studio Ghibli day. The next day, Sam Altman retweeted their product team lead on Sora. Sora is a video generation model. Who said, been super fun to watch the Sora feed fill up with great content. GPUs are also melting in Sora land. On March 30th, Sam Altman said, can you all please chill on generating images This is insane. Our team needs sleep. That's not okay. You're generating hype, but that's not a very healthy outlook. I want, especially on the B2B enterprise side, if you want to make money from enterprises, you have to project reliability. You have to give them reliability. You can't be saying, oh, look, our GPUs are melting. Oh, look, people are generating too much. Oh, look, our servers are going down. Oh, look, our team is not getting any sleep. I run a B2B enterprise facing business. We are all about enterprise grade. We're all about reliability. For video, you
Yeah.
can't say, I can't go to a client and say, I haven't slept in 4 days. Yeah. I'm wondering if I should just end there or just keep going. I can should just end it.
What in your opinion happens if OpenAI implodes? If it just runs out of money, what does that mean for AI? Nothing, right?
DeepSeek's there. DeepSeek runs at a few percentage points of the cost, like 3 to 4% of the cost of running OpenAI. There are other competitors. So the American models are all universally very expensive to run.
Mm-hmm.
And now, again, Chinese information sources are, you know how they are, right? I don't need to go into that. But now there's lots of models which are claiming to run at DeepSeek costs and train at DeepSeek costs, which is like a small fraction, 3% of American costs, American model costs. And also, yeah, it's not like any of these features has really, really disrupted an industry. These
Yeah.
are they're assistants, right? They're like B2B enterprise assistants. People are writing mails using GPT. People are using it to write resumes, to I'm sure we've discussed this before. Now, any website I go to, especially on the content side, and I'm sure this is even my website will have some of these because we've also used a lot of GPT, is something that content that engages, inspires, and resonates. Everything says that. I can't use the word resonate anymore because it reminds me of ChatGPT. I will write the word resonate and I'll be like, oh shit, I sound like GPT now. So life will go back to normal.
To miss
GPT
it.
has absolutely increased productivity in a lot of ways for us also, but sure, okay.
No, but there's nothing proprietary about OpenAI's model itself, right?
No,
There's nothing that it does that I couldn't switch in one of the others, one of the dozen others.
you won't
to-
even notice probably.
Exactly. So
You will
why?
switch over and you won't even notice.
I'm not being hateful, honestly, but there's airplanes changed the world, right? They defined the last century.
Yeah.
But there's no right airlines. There never was. There's OpenAI has done this remarkable job of bringing AI into the public consciousness, of getting billions of people to try it for the first time, and maybe that's all they were destined to do, you know. And it's a respectable epitaph. If it were to implode this year, it's respectable. They did something. They changed the world, you know, in their own.
Yeah.
All
And
the
yeah, absolutely. If we
activities.
disappear, so somebody else will take over quickly.
Yeah, exactly. Because this is a broader trend, but commodification happens really fast now, especially with the software tools, but even otherwise. Even if you were to come up with this amazing widget, physical widget that's life changing for many people, you have maybe 3 years to get it to mark to make your money before either a knockoff or a substitute or something comes in. And I'm being optimistic. 3 years, and
Hmm.
it's much worse in tech.
No, but I blame the VC industry. So I have a lot of thoughts on this. We should end soon, but a quick few thoughts on this one. I blame the VC industry. So we do video. We are trying to just massively speed up video production with people and with tech. And we build the workflows to bring it all together. So to the client, we own the project. Enough and more VCs have told me that our model is uninvestable
Mhm.
because I have literally heard. I was at this event a couple of weeks ago and I met this VC guy and I'm telling him about this and his immediate reaction was, "ये तो profitable model है," and he lost all interest. Which says a lot about the VC industry, but yeah, enough and more of them have said that, look, investable models are you need to be infinitely scalable. So therefore, you need to appeal to as wide an audience
Mhm.
in as narrow a tech-only niche as possible. Right, something that doesn't actually require people to execute, any people to execute. So there, we could resist because we had friends and family who were willing to put money so we can stay out of the VC ecosystem, but most people can't, right? They
Mhm.
need VC investment, so the model changes. So a lot of people, even if they originally had a different plan, they end up going the infinite scale path, which is the path to commodification. If I actually do AI generated video today, there's 1,000 of them on the internet. AI generated video generators, right? Text to video. What is my differentiation? They're all immediately commoditized. One will die, another will pop up. And they will
Mm.
all fall in that way, $20 a month, X number of credits. And it's perfect competition on day one. So I absolutely do blame the VC industry for this level of commodification in B2B SaaS. If I'm looking for an email provider, SendGrid, MailChimp, MailGrid, SendHawk, whatever it is, there's 100 of them, right? They're all
Mhm.
commoditized.
Yeah.
And yeah, if OpenAI goes, another one comes.
One of the stories that I was going to do this week, but ultimately dropped, is a Bloomberg Business Week deep dive, like of aquaculture startup that imploded. They had SoftBank funding, they had Sequoia funding, the Sequoia that has become Peak 15. So Sequoia India and APAC, they had also funded it. Great story. I'm sure some cherry picking has happened, but the narrative flow is quite nice. Please link that in the show notes of the founders saying the exact same thing. We were on a sustainable path. And then suddenly I got a call from my son and he says, no, you blow this up. And that's when I started fudging the numbers and all. It's convenient to blame myself for your
It is very
CrossFit.
convenient to blame Masa. I think he makes it very easy. He makes it really easy.
I get that, especially in the current climate. After everything that happened with WeWork, it makes
Hmm.
sense to do that. But there is a kernel of truth of because the numbers tell a similar story, not the exact same story, but a similar story. That is the point where we started maintaining two books, one for our employees and insiders, and the other to show to investors. Very fascinating story.
I will link that and I will read that. And
Yes,
I
I say it's
think
a nice long read, so you can spend the weekend on that. Are we out of time? I have one little thing to add.
go for it.
Yeah, so I just have a general grievance to air, just put that out into the world. I spent the last 3 years learning about risk premiums of starting with US Treasuries, and now suddenly that's not valid anymore. Almost a big chunk of level three was me banging my head about university endowments and case studies of how you do the investment selection and how taxation is not a criteria because endowments are tax free. And now Harvard is on the verge of losing its tax free status as a university endowment. Can I please have a slightly longer half life for the shit I spent so long to learn before it becomes obsolete?
By the way, so I don't know if you've been on Twitter today morning. The US administration, the White House is backtracking from the Harvard thing. They are covering down. They have actually said today that, oh, we don't know how this letter went out. They're refusing to
Right.
accept responsibility for that letter they sent to Harvard. So maybe your wish is coming true. Might last.
I don't care for Harvard one way or another, but the endowments and all the case studies were a real pain to stay awake through. So please, for fuck's sake, let my learning be relevant for a year or two more. I can feel like I got my money's worth.
No, do what I did. I did an MBA. So it wasn't relevant even on day one. So it's fine. But speaking of Harvard, by the way, like you're saying you don't care about Harvard. Did you see the Onion
Mhm.
headline yesterday?
No, I did not. What
The
was it?
headline was Nation can't believe it's on Harvard's side.
Nice.
Yeah.
Beautiful. Beautiful. And only the onion can do that. No, you said
Yeah.
you were in tell the whole story.
And so true.
No, lovely, lovely.
Let us wrap up now.
Yes, let's. This was fun.
This was fun. Confusing, but fun. And let's see Zencaster is as good as Riverside, or hopefully better. That's why we should. Bye bye, everyone. See you,
See you.
Ritesh.
Bye.